Okay, good evening, everyone, and welcome to the Anderson Report. I know we've been off, we haven't been on the air for a little over a week. A couple of family related things going on, but we are very happy to have everyone back today. And I'm just trying to, it's not going to work. All right, but we're here and some very interesting market activity both today and over the last week or so. We're going to run through it all real quick and hopefully uh, that will bring people up to date on what's been going on really since uh, we, the big sell off started just after September 2nd, really on September 3rd. Some very interesting relative strength to look at, and some very interesting other developments. A big IPO today, and the very strong positive relative performance from the transportation average, uh, almost with a very large exclamation point from Federal Express earnings after the close at the end of the day today, which catapulted Federal Express up another 10% after the bell. So let's take a look. The Dow today pretty much unchanged. The one disappointing thing about the market today is that markets were much higher during the first 90 minutes of the day. And after that point, pretty much kind of faded during most of the day. The markets had a very hard time this month holding a 2 day rally. We had a very good day on Monday. Um, uh, and today we started out strong across the board, but then faded to where the yes, Network One youth. Thank you for joining us, one of our more loyal subscribers. So we bear with me as I try to sync something up. If you are new to the broadcast, this is my YouTube channel. It's The Anderson Report. I am TJ Anderson, affectionately known by some people as Tim the Source Anderson. And you can also watch this broadcast on my YouTube channel, TJ Anderson 12. My Twitter handle is TJ Anderson 1. I've not been nearly as active on Twitter the last 5 or 6 days as I usually am. Um, but that will pick up as we throughout the next couple of weeks, particularly as we get close to the end of the quarter. We are 2 weeks away from the end of the third quarter right now. So, at the end of the day today, the Dow Jones Industrial Average pretty much unchanged. Um, Closed just the smallest fraction below 28,000 at 27,995. Hello, High Turbine. Yes, it's been I know it's been active. I've been watching it as much as I could, and I'm going to try to give a few insights on that tonight. So, the S&P 500 up 0.5%. The NASDAQ up 1.2%. Clearly, the NASDAQ's had a very sharp sell-off, which is coincident with the fact that the NASDAQ had clearly the sharpest rally off the lows from March. So, NASDAQ 11,190, Russell 2000 had a nice day yesterday, outperformed the other major averages, had strong gains in the morning, up almost 1%. closed pretty much unchanged um, at 1592. But what we really want to take a look at right now is the market hit their highs on September 2nd. And I will say that things were, to put it lightly, a little frothy back at the end of August and the first couple days of September. I believe that I mentioned that or alluded to it on a number of broadcasts late in August. So uh, we had the Tesla 5-for-1 stock split, the Apple 4-for-1 stock split. Those became effective after the Monday close on August 31. They had been very highly anticipated events. They were bought aggressively going into that effective date. And quite frankly, I was surprised to see them follow through with as strong rallies as they had both Tuesday, September 1 and Wednesday, September 2. And then, of course, on Thursday, September 3rd, we had a very sharp sell off. That was the beginning, that was really the first day of a 3 day sell off. We've been uh, basically consolidating the sharp gains that we had for the last few months since then. And there are actually a couple of constructive things going on in the market the last couple of days. But let's take a look at how much of a pullback the major averages have had since the highs that they put in on September 2nd, with the caveat that we were, the market was, to put it lightly, a little giddy at best. So the Dow Jones Industrial Average at today's close, 27,995, is down 3.8% from where it closed September 2nd. Okay. It's about a 2 week sell off, down 3.8% after very strong gains in July and August, still up sharply for the quarter with 2 weeks to go. The S&P 500 down 5%. The S&P 500 closed September 2nd at 3580. It closed today at 3401. That's a decline of 5% from its highs on September 2nd. Uh, Now, a critical level to watch for the S&P, if it were to continue to have rally attempts this week, is 35.25. And the reason I say that is because that was the intraday high on September 9 and September 10. The market didn't close at that level, but it got to that 34.20, 34.25 level on both of those days, September 9 and September 10. So if I can do this right, that was last uh last Wednesday and Thursday. Okay? So, it closed today at 3401. We want to see the S&P 500 close above, it closed at 3401. We want to see it close above 3425. Had a sharp 3 day sell off basically on September 3, 4, and then the following Monday. We want to see it close above 3425. That was the intraday high, September 9 and 10. Now, the NASDAQ composite, a little bit of a similar situation, but the NASDAQ has had a sharper sell off. Why? Because it had had a much sharper rally during not just the first 2 months of the quarter, being July and August, but also off the March lows. Even right now, the Dow and the S&P are up about 50% off the March lows. The S&P 500, the Nasdaq is up about 60%. So the Nasdaq has declined 7.2% from its highs September 2nd. And the the key level for the Nasdaq is 11,300. That was the intraday high on September 10th. Okay. It closed today at 11,190. So it's about 110 points from there. That's maybe about 1%. The NASDAQ was up 1.2% today. So 1% moves for the NASDAQ happen in the volatility we've seen the last few months pretty easily. Good evening, Rick. It's nice to have you with us. Um, okay. Now, the Russell 2000. The Russell 2000 has had a more gentle sell off from where it was September 2nd. And I think that that is largely because it had not had nearly as sharp of a rally, and it had trailed the higher cap major averages. The Russell's a major average. It's just not a high cap major average. It's the stocks that range 1,000 to 3,000 on market capitalization in the Russell uh, investment universe of 3,000 stocks. So we've got the Russell closed today at 1538. It was up a tenth of a percent. It's a little disappointing. It was up close to a full percent during the first 45 minutes of the day, faded most of the day after that. But it did have a 2.3% rally um, on Monday. So the Russell closed at 1538. The Russell had closed at 1592 on September 2nd. Again, 1600, a very difficult technical level for the Russell. It got within 8 points of it on a close on September 2nd. May have gotten a little bit closer on intraday level. Backed off today after a very nice rally yesterday. We'll see how it plays out the rest of the week. But the Russell down 3.4% since September 2nd. The Dow down 3.8%. The S&P 500 down 5%. The NASDAQ composite down 7.2%. Clearly, the big momentum mega growth stocks in the NASDAQ world had were really some extremely exaggerated uh, stock price action toward the end of August and the first couple of days of September. I'm not going to go into bubble territory, but a little hyperbolic with Apple rallying 25% after they announced a 4-for-1 stock split, and Tesla trading up to 2,200 after they announced their stock split. Now, obviously, I mentioned this on one of the last broadcasts I did about a little over a week ago that the markets were exaggerated on the upside, partially by this big trade that was being done by SoftBank. The guy who runs SoftBank is a real renegade. He loves what's the best way to put it? People that push the envelope real hard. He pushes the envelope hard. He had bought 50 big article in the Financial Times as well as the Wall Street Journal. Uh, he had bought about $50 billion of mega growth tech names in the NASDAQ space, and then bought about $5 billion worth of options on those names. I think he was also probably part of the unwind on the way down. If his buys were, even if they were just early in the second quarter or late July, early August, this could have been a very, very a well timed trade, a very gutsy trade. um, by SoftBank, who, in a very well publicized way, went for their lungs with WeWork. He was a big promoter and a big backer of WeWork. He's been a big promoter and a big backer of other controversial uh, people that have uh, um, had big success stories with stocks. Some of them have worked out great, and of course, he's had a couple of hiccups. Um, it will be very interesting to see any write up that we get from the FT. I think they were probably the lead expose on that, on whether or not he is still rewinding. Now, the NASDAQ, again, we got to watch that 11,300 level on the NASDAQ if it continues to rally this week. And we got to watch the 3425 level on the S&P 500. It went out at 3401. Now, um, so the correction's been going on for about 2 weeks. We're 2 weeks from the end of the quarter. What could I possibly be leaving out? Well, just to show you that this was not an across the board route going on in the market during the last 2 weeks, the Dow Jones Transportation Average today closed at 11,000 for it closed a few pennies shy of 11,477. We'll call it 11,477. Okay? Remember that number. The Dow Jones Transportation Average closed at 11,477. The transports closed at 11,451 on September 2nd. So the Dow Jones Transportation Average is higher, closed higher today than where it closed on September 2nd during the same period of time which the Nasdaq is down just over 7%, the S&P is down, S&P 500 is down 5%, and the Dow Jones Industrial Average is down 3.8%. Now, this could be the beginning of a very significant rotation and possibly even a shift, at least a shift in leadership, maybe just additional leadership for the market if the tech names kind of find themselves and get a second wind. I think it's a heavy lift to ask them to go make new highs before the end of the quarter. I really don't think that's in the cards. Um, of course, before the end of the year, a lot can happen, especially with the election coming up. But the transports hitting a new high, and I don't think they're going to pull back tomorrow because Federal Express had earnings after the bell tonight. They were very strong. I don't have the details just in front of me. I've been a little bit spotty with when watching the market uh, every minute of every day. And yeah, Rick, you've got someone very, very knowledgeable responding to you here with your mention on the Hong Kong doctor. I heard a couple bits and pieces on that story. Either Liz McDonald was talking about it or somebody earlier was talking about it on Fox Business. I don't believe they said definitively, but they said it's very, I think they're trying to temper their story and say it's very, very likely that this was started in a lab in Wuhan. But I don't think that really surprises a whole lot of people. I think it's just maybe surprising that somebody from China or Hong Kong is really um, promoting that story fairly vocally. But look, the Dow Jones, let's get back to the market averages just for a minute. The Dow Jones Transportation Average closing today higher than it was September 2nd, with the Nasdaq down 7%, the S&P down 5%, the industrials down 3.8%. The market needs a new area of leadership if it's going to handle this sell off in tech from what was clearly an overbought condition. And if big money is going to rotate into another sector that can give some leadership for the market, uh, going into the last 2 weeks of the quarter, as well as going into the beginning of the fourth quarter in October. So the airlines have acted fairly well. The TSA numbers have been improving after they had a little stretch of improvement there, although gradual. But then they kind of flatlined for a couple of weeks. But over the last 10 days, and late August, they had the TSA numbers had stopped really going up on a comparison same day over the prior week. But the Friday and Monday around of Labor Day weekend. Now, and again, this was Labor Day weekend, but that Friday and Monday had 2 days where TSA checkpoint volume was over 900,000. Okay, we've not seen that number. Those are the first 2 days we've seen over 900,000 since the big, we started to shut everything down in very early March, even before there was an official shelter in place, um, guidance from the administration and the CDC. So TSA checkpoint numbers up. Airlines have been holding their own. I will tell you that I was on two airline flights about a week and a half ago to where I am now in Michigan. And I was very impressed with the cleanliness of the airlines, the fact that the plane was noticeably clean, had noticeably been sanitized just before we boarded it at Newark Airport, and then just before my connection that went out of O'Hare, and that the airport itself was at Newark at the terminal I was in, which was a United terminal, a completely no touch experience at any venue you went into, whether you were going in somewhere to buy a bottle of water, a snack, or something even a little bit more than that. I checked out 4 or 5 different um, retail venues from like you know news, candy, soda, water stores to uh, even the places where they have now iPads at iPad type devices at every location where you can sit down and order something without a person coming to your table. I don't know if it's like that at every terminal at Newark. It wasn't like that everywhere in O'Hare, but my takeaway was that when people start to fly again or talk to people who have recently flown, I'm talking about over the last 2 to 3 weeks. It's taken the airlines and the airports a while to get this all set up. I think people's comfort level on flying is going to increase very rapidly if they fly sometime during the fall or if they talk to people who have flown during the same time period from very late August coming into September. Uh, there's no question that the airlines are making a full court press to give people the comfort level that you would need to fly airlines, particularly airlines that are going to run at higher than 50% capacity. I would say my flight from Newark to O'Hare was two-thirds full. They given you hand sanitizers, in a packet when you walk on. They give you like fully enclosed snacks if you want a snack. And it was just look over a couple of decades. I'm sure people have been on on flights where they've said, "Boy, this plane is just not very clean." I'll tell you something. The two different planes I was on, right after, it was right before Labor Day. It was the Sunday before Labor Day. Those planes were clean, and it was noticeable. And they were both United flights. I think it's possible that maybe some of your really, I don't know that that's going to be totally universal on every airline. I did have a couple United flight attendants tell me that they're going to start flying to a number of destinations in South America in late September, early October, and I'm sure they have. Um, I'm sure they have done their homework on where they can fly and give people a comfort level that they're doing everything they can possibly do to make the flight uh, safe and make people comfortable on the flight. Uh, Airline stocks have held their own during this sell off, probably a little bit higher than they were in on September 2nd. Um, Now, and the transportation average higher than where it was, but that's not just airlines. That's also rails, which tells you that the economy is picking up. There's no doubt about it, and also uh, maybe a couple of cruise lines. I'm not up, and some truckers, and some uh, some delivery stocks, FedEx, UPS, et cetera, et cetera. Yeah, clearly, Dominic, I think the domestic carriers are better off than the international carriers because I don't think that the international carriers have uh, really even. They might have some flights going on, but I think it's very, very spotty. I think it's very spotty, and I think most people, even Delta, which is a big international carrier, I've seen their CEO on a few times saying, "Look, it's going to be mid 2021 before we're really starting to ramp back up on our international flights." And of course, it's all a little bit of a moving target. Last public transport, yeah, public transport's a whole different story. I've been on the PAT train a couple times uh, uh, Lower Manhattan to just into New Jersey, just the other side of the river. I would say it's been lightly attended. I can't really speak for the subways in Manhattan, but the public light rail or public transportation is always going to be much harder, a much heavier lift to keep that feeling, looking, smelling clean than airlines where they can go in and sanitize uh, the plane between every flight. Now, so that's where the market is. Um, we had a little bit of tomorrow will be an interesting day. We have a couple pieces of economic activity tomorrow. We're going to have the Empire State Manufacturing Report. Actually, we had the Empire State Manufacturing Report today, and it was a pretty good report. It came in at 17. That was versus consensus of like 6.5, 7. So it was a beat. That's basically the New York State Fed regional Fed report, and the prior reading was 3.7. So that's a little bit of an uptick there. Certainly a positive sign. Um, Tomorrow we're going to get retail sales. That'll be a widely followed number. Clearly, retail sales have been very strong online, and a big issue for the department stores and a big issue for the malls. So, in person traffic, uh, a struggle. Online, um, just crushing it. I believe that I saw that Amazon started their Amazon Plus or Amazon Premier. I'm sure they're not calling it Amazon Prime, but their product to compete with Walmart. I'm talking about Walmart. Walmart started their Premier online service today and or this week. I'm not sure what they're calling it. Uh, Clearly, it's their product to compete with um, Amazon. Um, when Walmart reported their last quarterly earnings, their online volume was up 100%. But keep in mind that's coming from a very, very low base. But it's the retailers that can figure out that it can have a good online platform, and or if it's retailers that have a lot of locations in high population areas, uh, the ones that have a good model for ordering online and then going to pick up right at the uh, customer service counter, or maybe even have it brought right out to the car. Um, Target's online business was up 200% when they reported about a month ago, and that pushed that stock up to a new high. So, look, the retailers that get it right are going to do well. Um, but what we get tomorrow from retail sales will be macro retail sales number, not individual, not sales numbers from individual retailers. Now, uh, we talked about the market, and I always did. The one I always did mention the breadth numbers, positive but not that great. Plus 1650, 1650 advancers, 1350 decliners. Nasdaq about the same. Um, breadth numbers never got really, really, really bad. We had that very sharp 3 day sell off, September 3, 4, and then the following Monday. Actually, the following Tuesday, because it would have been after Labor Day. So that was 3, 4, and then 8. Uh, yes, Tuesday was the 8th. And the breadth numbers really, and NASDAQ went down 10% in 3 days. The breadth numbers never really got, let's say, horrific. Okay. Um, Everything went down a little bit. Oh, some stocks a lot more than others. If people, there's no doubt that some people were overextended in big tech. There was a little bit too much euphoria with the mega growth tech names. They're trying to, you know, find their footing right in here. Different levels for different names. Um, but probably the weakest sector today was the financials, highlighted by just, I mean, Citigroup down 7%, JP Morgan down 3%. A little bit of a negative story on Citigroup. Their CEO, Michael Corbat, leaving at least a year earlier than some people had expected. And then the following day, which was today, we get a story about how they're really getting the heat on having proper risk measures in place, et cetera, et cetera. So, look, Citigroup seems for decades has been, say decades, but 15 years has just always been a half a step behind a couple of the others. We'll see how that sorts out. Financials down 1.3%. Is the worst act, probably the worst acting sector today. And with Nasdaq up over 1%, I'm sure you can imagine that uh, information technology, communication services, those were two of the better sectors. We had a big IPO today. It's called Snowflake. It's a it's going to trade tomorrow on the New York Stock Exchange. It was priced at the end of the day after the close at $120. That is a very high pricing for an IPO. They usually try to keep those like 50, 60, $70. It's very unusual to see IPOs priced above $100. Even in the internet bubble, going back 98, 99, early 2000, a lot of IPOs opened above $100, but back then you would have stocks priced at 75 and open at 220. It was crazy. It was a bubble. This is not a bubble. This is just a period of um, extended price gains in the technology sector. But this Snowflake stock, a lot of people are going to focus on it tomorrow. I'm sure you're going to hear it all day long tomorrow. The price range was 100 to 110. It was priced at 120. It is a cloud based data management company. That's the hot space. That's where Salesforce is. That's where a lot OCAT is. That's where a lot of these companies that have been driving this NASDAQ market, one level a little bit below the mega growth tech names, because a lot of these stocks aren't necessarily mega cap stocks yet. Salesforce is, and Salesforce got added to the Dow Jones last month. But this is a cloud name. That's a hot space. The symbol is SNOW. It came with a valuation of 33 billion. That is much higher than its last round of private equity financing, which valued the company at 12.8 billion. Yeah, Jenny, it's a cloud-based data management company. People have been talking about it. It's probably the number one IPO of the year so far. It's been highly anticipated. It'll be very interesting to see how it trades tomorrow. It got priced at $120. It's unusual for IPOs to get priced above $100. It is a hot sector. Um, but they did their last round of private equity financing in early this year. Okay. Probably before the COVID stuff started. And that company then was valued at 12.5 billion. With this IPO being priced at $120 a share, the company's valued at 33 billion. Now, I will say that one of the big challenges in the IPO market has been that the private equity market and the venture capital market has exploded so much in dollars and in size that these companies do, where companies like Microsoft went public in 1984, companies used to go public as soon as they possibly could. Now they stay private as long as they possibly can, almost to the point where companies raise, they do rounds of venture capital financing, then they do private equity financing. There's a first tranche, a second tranche, a third tranche, a fourth tranche. And it's almost as if companies' valuations get stretched so high from the last couple rounds of private equity financing that the biggest challenge they have going public is then when they go public, they can't go public at a valuation that even matches their last round of private equity financing. This was even a problem 10 years ago when Facebook went public. Facebook went Facebook went public pretty close to its last round of private equity financing, and then the stock traded down. People got stuffed with the stock, and then the stock traded down close to 50%. And it took about 18 months to get back to its IPO price. Will people be selling at off at the opening? There is no doubt that some people will be flipping that stock on the opening. Um, but um, it look, this is a real company with real revenues and a real product, and people have been talking about it for a while. The management group is very highly regarded. Uh, they have a decent track record, so there will be some people that will be selling, but I wouldn't be surprised to see the stock trade um, higher than where it was priced. Uh, Vanilla, have you invested in Nikola? Well, now if you invested privately in Nikola, that's great, but you got to realize one thing: Nikola did not really do a capital raise when they went public. They went public through what's called a reverse merger because they were Nikola. For those that don't know, is the truck company that's going to that make electronic trucks. They've got they definitely have contracts with people. Uh, they have not produced any vehicles yet. I believe that General Motors uh, did a very significant investment in the company. It was announced a couple of weeks ago, but they did not raise capital when before they started trading publicly. It was certainly not a traditional IPO. They were bought by what's called a SPAC, or a special purpose acquisition company. And they, because that SPAC was a publicly traded entity, then by default, Nikola became public and that SPAC changed its name to Nikola. I believe that 4 or 5 electric vehicle companies have become publicly traded companies by being acquired by different SPACs, or special interest acquisition companies. These are companies, a SPAC is something, special interest acquisition company is something where somebody with a very strong track record, investment track record, raises a lot of money. It becomes an IPO, and basically the investors are just doing a faith walk on the guys, on the person or the team's reputation for things that they've done in the past. But I will tell you that these 4 or 5 electronic companies going public this way is a little bit of I've got my warning sign up a little bit on that, because I don't think any of these companies could have gone public on their own. They haven't even, they don't have any revenue yet, and they haven't even produced any product yet. Now, clearly General Motors must have taken a very close look at Nikola and must have looked at their production plans and looked the whole thing over 8 ways to Sunday, as they would say, and decided that it was worth a shot. But for a firm like General Motors to put in what they put in, even if the thing doesn't go well at all, it's not going to it's not going to crush General Motors. It's going to be a write off in a report in a quarter way down the road somewhere. Um, so I think it's definitely a positive sign that General Motors is invested in Nikola. But go back and look at the stock price action, and I don't have it in front of me. Go back and look at the stock price action from when General Motors made that investment. I don't really think Nikola got a real big bounce on the news, um, at least by where it closed at the end of that day. So Jenny, we got to watch this trading tomorrow in um, Snowflake, SNOW, on the New York Stock Exchange. It's going to be very interesting. Now, what else? The Fed meeting tomorrow. I mentioned the Empire State Report, retail sales. We've also got the Fed meeting tomorrow at 2 o'clock, 2 day meeting. Clearly, they're not going to change rates. I think the thing to look at for the Fed is that this is the first meeting that they've had since Chairman Powell's Jackson Hole speech, which he didn't really give at Jackson Hole, it was virtually, where he said that, look, we're going to let inflation run hot. And if it gets to 2%, we're not going to tap the brakes when it gets to 2%. We don't care if it goes to, he didn't list these numbers, but he was basically saying inflation can go to 2.1%, 2.2%, 2.3%. We're going to make sure that it's not there just for a blip. We're going to, and in fact, we're going to let inflation run a little bit hot, maybe for 2 or 3 quarters, maybe for the better part of a year. Because the big challenge that the Fed has had that they haven't been able to accomplish is that they want inflation to get uh, to 2%. They feel that that's the healthy level because that will show economic uh, strength in the economy and economic progress. They don't really put it this way because they officially don't comment on the dollar, but it will help the level of the dollar. And in fact, even since the Fed made those statements, the longer end of the curve has gone up a little bit. Even during the sell-off, the lowest we got was 0.65. I think 6 weeks earlier when the market sold off, we got down below zero. We got down below zero point 0.6 yield on the 10-year. Uh, and that steepened the curve. That's helped the bank stocks, except for the last couple of days. The banks have not started off this week positive by any stretch of the imagination. They were looking like maybe this time finally they were going to get a tailwind, but the Citigroup news just put a big wet blanket on the bank stocks for the last couple of days. Now the other thing, it's already almost 9:50. Um, Look, there's 2 weeks left in the third quarter. A lot of people talk about follow the Atlanta Fed GDP tracker. I try to I watch it. I try not to make a big deal of it early in the quarter. It moves around a lot. It gets pretty volatile. Keep in mind that GDP for the second quarter was down what? Down 32.8%, something like that. I think it was revised a little bit less than that. So let's say it was down 32.5%. Clearly, that was the big shutdown COVID month. Um, and obviously, there's a lot of anticipation on how strong of a bounce back the economy can have. And clearly, it's something that the administration and President Trump and his economic team has been touting and has been talking about uh, almost every time they get in front of a microphone. Okay, you've heard Trump talk about maybe it's a super V economic recovery. We've had clearly a V-shaped recovery in the stock market, uh, and we're trying to have a V-shaped recovery in the economy. I haven't seen the economic numbers really contract like the stock market did over the last week, but the stock market was ahead of itself. So the Atlanta Fed projection early in the quarter, it jumps all over the place. And every time a important set of data comes out, they change it. But as you get later in the quarter, it becomes a much more interesting um, guidepost to follow because they do have a track record of being a little bit more than just in the ballpark. They're usually within, look, when GDP's, you know, four and a half, four, 3.8, when it was moving around in the high ones to high threes over the last 3 years, they're usually pretty close on a quarter to quarter basis. They're within 0.4%, half a percent. One big aberration for I think uh, Q4 last year. But later in the quarter, and we've only got 2 weeks left in the quarter, it's worth watching because you're getting to the point now where there are fewer data points that can really make an impact on their projection. But you will have some, definitely, and you'll have some even after the quarter ends. Pieces of data that come out in uh, early October, first couple of weeks October, that are for September, and of course, September's in Q3. So, right now, the Atlanta GDP tracker for Q3 GDP is at plus 30.8%. It will get a revision after tomorrow from at least retail sales, um, and maybe one or two other pieces of data that's coming out. I will just say that the Trump economic team would do cartwheels if Q3 GDP came in at plus 30.8%. That's currently what the Atlanta Fed is projecting. It'll move around a little bit over the next couple of weeks, but it's worth watching. And it's worth watching what kind of a retail sales number we get tomorrow, and then what the how that tweaks the Atlanta Fed's projection, which they'll probably update by 1 o'clock in the afternoon. Okay, so um, I've got a lot of family stuff going on right now in Michigan. I'm going to try very hard to do a broadcast tomorrow. It might be at the same time, uh, 9 o'clock rather than 7 o'clock. I know that's better for some people. It's not better for other people. There's no perfect time. Everybody can always watch it on replay. If anyone's new to the broadcast, please subscribe to the YouTube channel, The Anderson Report. Hit that red subscriber bar. Hit that little bell right next to it, and you'll get notifications of when the next broadcast is. I try to schedule them at least 3 to 4 hours in advance. Uh, if you're watching on Periscope, it's TJ Anderson 12. My Twitter handle's TJ Anderson 1. I'll have a few comments on Twitter tomorrow. I'm not going to be as active as I would if I was at home base with my full computer setup. But but I'll be out there. Please shoot me any questions. I love the comments tonight. They're all very well uh, stated comments. Please feel free to come at me on Twitter with anything you'd maybe like me to address as the week goes on. Network One, thank you very much. And everybody else, thank you for joining. Thank you for watching tonight. And we'll see you tomorrow. Have a great night.